Live from Washington, D.C., this is Transport Topics Newsmakers, the digital interview series that gives you access to candid conversations between industry experts and a veteran reporter. Sponsored by Sage. Here's your host, Dan Ronan.
Hello and welcome to our latest edition of Newsmakers from Transport Topics. I'm Dan Ronan. Thank you for joining us. We'll be joined in just a few moments with Bob Costello. He is the chief economist with the American Trucking Associations. And we'll have a conversation with Bob about the economic conditions, not only in the country, but specific to the trucking industry. Before we begin our conversation with Bob, I should tell you we are pleased to have Sage Software sponsor today's edition of Transport Topics Newsmakers. Sage is the market leader in cloud-based management solutions, supporting millions of small and medium-sized businesses globally. Trucking and logistics companies, well, they trust Sage for their financials. With easy TMS integration, the finance leaders are using Sage to spot trends, make decisions faster, and provide a vision how to move forward. They're also creating reports that matter to key stakeholders and automating those routine tasks so their teams can focus on strategic initiatives. And Sage customers are improving the work-life balance by streamlining processes and connecting from any location. Sage is a member of the American Trucking Association's National Accounting and Finance Council and was a platinum sponsor of NAFC's annual conference in Indianapolis earlier this month. We thank Sage for their support. Now let's check out the latest ad from Sage, which you may see in your city soon. And then we'll talk to Bob Costello.
I wear a few different hats as CFO. You know, sometimes it's referred to as chief fixing officer. Wherever there's a fire in the business, you know, I'm often there first. And I think that's the bit that I really enjoy and love. It kind of spreads more widely than finance.
Whatever hat CFOs like Imran need to wear, Sage's tools and insights can make sure they fit. Sage, helping business flow.
Hello and welcome to the latest edition of Newsmakers from Transport Topics. I'm Dan Ronan. Our guest is someone who is very well known in the trucking and transportation industry, especially when it comes to economic matters. We welcome back Bob Costello. He is the chief economist of the American Trucking Associations. First, a little bit about Bob. He's been with the ATA for now more than 25 years. He's the Federation's chief economist, managing all of the collection, analysis, and dissemination of trucking economic information. This includes the several monthly trucking economic indicators, the motor carrier financial and operating data, the annual freight forecast, driver wage studies, the diesel fuel price report, and economic reports as well. Bob also does economic analysis on proposed regulation and legislation impacting the trucking industry. Bob, a lot of questions about where we are at with regards to the economy. So as the expert, where are we at with regards to the economy?
Well, by the way, it's a pleasure to be here, Dan. I always enjoy talking with you. In terms of the macro economy, I heard it referred to the other day by somebody. I can't take credit for this, but they called it the Timex economy, right? Takes a licking and keeps on ticking. And it just continues to grow, albeit at a slower pace. But the macro economy just doesn't seem to be entering a recession yet. And so we have to understand there's some unique factors in trucking. I'm sure we'll get into it. But the broader macro economy continues to grow.
We've had exceptionally low unemployment, the lowest unemployment back to the Vietnam era, the summer of 1969. Steady growth. Manufacturing in this country is coming back, much more investment in manufacturing. It would seem to me these are good signs for trucking, even with the slowdown that we've seen.
Yeah, so the macro economy hasn't entered a recession, excuse me, yet, even though, the Fed has been on the most aggressive monetary policy stance in 40 years. But, I think for the listeners, they have to understand the freight economy is in a recession, right? Consumers are transitioning over to more services things like travel, sporting events, things like you and I love, Dan, movies and so forth, and less on goods. During the depths of the pandemic, we were just at home working, and those of us that were still employed weren't traveling, weren't doing that stuff. So we just started buying stuff. Now we're on the flip side of that. People are making up for lost time in terms of travel, services in general. And so that means retail sales are softer. Retail inventories got bloated, so that was a drag. You are correct. Longer term manufacturing, I'm very bullish on it, but near term, things have softened up there, and manufacturing is now contracting on a year-over-year basis. We know what's happening with housing starts. As the Fed has increased interest rates, we've seen mortgage rates go from 3% to 7%. You wouldn't move unless you absolutely have to, or build a new home unless you absolutely have to. So you add all those things up, and that puts the freight economy into a recession, even though the macroeconomy is not.
By a freight recession, Bob, is this actually a contraction, or is this more just a slower term growth when we saw 2020, 2021 during COVID, when we were looking at enormous increases? Is this just more of a much slower rate of growth?
No, it's an actual, now the economy that would fit into that camp, but we are now seeing various metrics measuring freight, whether that's truck tonnage, whether that is the number of loads hauled and so forth, these or the spot market, contract freight, now to all of the above is now contracting on a year-over-year basis.
So what does that mean for the trucking industry, which is pretty competitive? If you're an LTL carrier, or you're another business that is fighting for loads, does that mean that you're cutting your rates to stay competitive against someone who may slash their rates by 5 or 6%?
Well, in the near term, no doubt that supply supply is not expanding. I actually think supply is contracting, but because demand is falling, we got a situation where there is a little bit of too much supply out there for the moment. And so we know that shippers like to react to that and so forth. So there is pressure in that area. But there are areas that are much worse than others, right? So spot market is much worse than, say, contract truckload. LTL is sort of in between those two. LTL's worse than contract truckload, but not nearly as bad as spot market. Just as an example, spot market volumes have fallen from their peak, have fallen about 80%. Whereas so far this year, contract loads are down about 1%. In April, we're calculating the May numbers, and April is off about 4% year over year. So it just depends. So it's all down. It's just, much worse in that spot market. Give you another example, LTL shipments off about 12-13% so far this year.
Bob, you had said a couple months ago that the driver shortage was easing a little bit. If the market is contracting a little bit, would that help with the driver shortage? But also let's factor in as well that we've lost tens of thousands of drivers to the clearinghouse because of marijuana violations. And those drivers, a lot of them have not come back in. So where are we at with regards to the number of drivers who are out there? So
you got to always remember, and what I think it's very important for people that don't deal with data on a sort of a daily basis like I do. You have structural changes and cyclical, right? So things we were talking about, right? Manufacturing. Structurally, I'm very bullish on it. I think there's this nearshoring, reshoring happening. But cyclical, it's down because things have slowed in the near term. Same with the driver shortage. The structural problems of the driver shortage remain. And that means over the long run, the driver shortage is going to continue to be a big problem. Now, cyclically, it's gotten a little bit better here recently, not because anything has fundamentally changed, except for the fact that demand for freight has slowed down And that's really why it's gotten a little bit better. It's not that things have significantly improved. So, and you mentioned the Drug and Alcohol Clearinghouse for very good reasons. Since January of 2020, that's knocked out about 120,000 people out of this industry, drivers.
That's a big number, isn't it?
Huge. Before the getting a little bit better, the shortage was 80,000. So, here we have a huge. You could have essentially fixed that.
Do you have an actual number, Bob, on where we're at probably on the driver shortage? What you hang on as the number and say, this is what it is?
Yeah. So before the freight slowdown here is about 80,000, a little over that. We're going to get down to about 65,000 this year. Again, that improvement has nothing to do with the fundamentals of the driver market, except that we're in a freight recession.
Bob, there are some in the industry who question those numbers, and they look at those numbers skeptically, and they say that no, there's really not a driver shortage; it's just a retention shortage. How do you answer those criticisms and those folks that say that? Because you hear them a lot, I'm sure.
Yeah, first of all, this idea that the driver shortage is unique to the U.S. couldn't be further from the truth. Most countries are dealing with the driver shortage to some extent. Europe, right, has a driver shortage. Mexico, Canada, China,
Poland
has a driver shortage, right? So it's the uniqueness of this occupation, right? Out on the road for periods of time before you get home, at least parts of it, that's sort of shrinking a little bit, but it is not unique to the U.S. And by the way, a driver shortage is not a bad thing for the drivers that are in the market. It just means, when you have any situation where demand outstrips supply, what happens to price? Goes up. Same thing for drivers. Their pay is going up because there is a shortage. So it's a little bit better in the near term. There is, and by the way, retention has gotten better. Is it still high? Sure. But not. It's actually on par with some in tech and so forth. So we've seen over the years turnover rates come down. But so anyways, there's many reasons for the driver shortage. Demographics, high age, gender, you name it. I could tick through a whole bunch of lists, a whole bunch of things on a list on what causes the driver shortage. But we absolutely have one. Anybody that questions it, go to a trucking company, see what they have to deal with. Maybe it's gotten a little bit easier here recently, but it is still very difficult to find quality drivers.
Is the action by Congress in the Infrastructure and Jobs Act allowing for the apprentice program to get young drivers, those 18, 19, 20-year-olds in, is that working now that we've been into this bill, this law for more than a year and a half? Is it working?
What's interesting, Dan, is Europe just lowered across the board the starting age from 21 to 18 because of their driver shortage. So we have the pilot program. It's still relatively new. Listen, because there's many factors that cause the driver shortage, it means there's going to be no one solution that fixes it, but there's a bunch of different things we can do, and certainly doing it in a safe manner, lowering the age from 21 to 18 is going to help.
Okay. I want to shift topics a little bit, Bob, on a topic that we've been all following very closely. Recently, just in the last little bit, it looks as though we have labor peace out on the West Coast ports. The PMA, the management group that is responsible for 29 ports and warehouses, and the ILWU have tidied up a contract they negotiated for almost a year. It took almost a year since this contract expired. Is that going to be helpful for the overall economy and for the trucking industry?
Sure. My hope, if they actually, it's a preliminary deal, but as long as it holds, we're very excited about that, right? Because that would have been, disastrous. The West Coast ports have already lost market share to the East Coast ports during the pandemic. I don't think they're going to gain all of that back by any stretch. But my hope is that if you look at the inventory cycle, if we could just get to a quote unquote normal seasonal pattern this fall. So actually have a fall freight season. Last year, we didn't have one. The years before, during the pandemic, there really wasn't one because it was just gangbusters all the time, right? But if we can get back to some sort of normal seasonality, which includes bringing in stuff from Asia into the West Coast ports, I think things will start to improve for the trucking industry. So I'm glad that this impediment, that if that starts to happen, that shouldn't be there because of this, at least, deal that seems like they've come to.
Bob, I'm glad you brought up the East Coast, West Coast thing, because just the other day I was in Savannah, Georgia, and got a pretty extensive tour of the port of Savannah. They are in the process now of expanding that port, spending $2 billion to take it from a $6 million capacity TEU port to a 10 million capacity annually TEU port. 800,000 TEUs a month is what they want. They see that around the curve that the Atlantic coast is really where it's at. They see this, and they're investing the money now in both intermodal and trucking and cranes. I mean, the growth there is pretty spectacular.
Oh yeah, I think that East Coast ports can continue to do well. West Coast is still going to be important, right? But I agree with that assessment. I think that East Coast ports can continue to do well. They gained market share during the pandemic when West Coast ports were so backed up, right? And shippers realized, and logistics companies realized, hey, we can move some of this stuff right to the East Coast, and then just goes on truck from where it needs to go generally. So, all ports except for Houston right now are down on a year-over-year basis, right? So we can't really measure the near term on that, but structurally long term, I think those East Coast ports can do well.
I want to bring up another topic that is port related, because I know this is something that is near and dear to you. And that is, I was struck as we were going through Savannah at the incredible need for chassis at Savannah and all the ports. They need chassis so badly, and there's such a shortage of high quality chassis with regards to those that aren't 25 years old with bias ply tires in pretty crummy conditions. There's been a relatively big decision lately on the chassis front. Now, I know we're going into the weeds here on this, Bob, in a ways, but explain for me what this all meant and what this means for the trucking industry.
Yeah, so first of all, there absolutely is a big need to replace a lot of chassis out there, right? As you said, they're getting old, and they need to be replaced. And there's been difficulties of doing this. A few years ago, there was a case against a company that was bringing in chassis from China. They were also assembling those chassis here domestically in the US, but they were essentially bringing in all the components and assembling them in the US. And domestic manufacturers took a case to the International Trade Commission and was successful, and as a result, the ITC and the Department of Commerce put some significant tariffs on those Chinese chassis. And what my members were telling me is, they were using that as a source because they could get high volumes of quality chassis, and they were saying they weren't any cheaper. But as a result, there's these large tariffs on those now. The domestic producers generally have not been able, and it's tough because of COVID and everything, but have not met those. And then one of those domestic producers got caught by the CBP, Customs and Border Protection, of taking Chinese chassis, sending them to Vietnam and then to the US, and not paying those duties that were assessed, as in that company happened to be one of the complainants in the original case, which is very ironic. And now you have thousands of chassis that are sitting in storage that cannot be sold in the US market. And that just hurts the buyers, my members, of that even more. And the ports, right? The ports are buying a lot of these chassis too.
In South Carolina, I'm told, a source told me they've got 2,500 chassis in storage, and they're running older chassis right now at that facility because they can't bring these new ones that have, good lighting and better tires and great brakes. They can't put them into use because of the ruling.
Yeah, and I know that the company that got busted for this is appealing it, but CBP doesn't just do this stuff willy-nilly. They actually went to Vietnam and did an investigation and came up with this ruling. So those chassis, unfortunately, in my opinion, will most likely will not be able to be used in the U.S. at all.
So they'll be sent to some other nation, used at a port somewhere in China or Vietnam or Indonesia, somewhere like that.
Yep.
And yet we still have a chassis shortage of high quality equipment in our country right now. It's a crazy story, isn't it?
It is. It is.
Bob, while we've got about 8 or 9 minutes left, I want to talk with you about another area that you had discussed and you and I've chatted about before. And that is that if 2 years ago, if you were a trucking company and freight was going gangbusters and you saw the spot market rates where they were at, and you said, I'm going to push my chips out onto the table and I'm going to start buying used equipment. And suddenly the price of used equipment starts going up and hit over $100,000 in some cases for used trucks. So you borrowed some money, you bought some used trucks, you got into the spot market, but lo and behold, the spot market has crashed. The value of your trucks, the equity in those trucks is also going down. So now you have a high interest note for the equipment, you have declining spot markets, and you have a diminished piece of equipment because of you're losing the tax breaks after a while with depreciation, but also just the value of it is going down. So for those trucking companies, it's sort of it's the perfect storm, isn't it?
It is. I think, first of all, it's tough out there for everybody right now. But I think that there are companies going out of business every day, right? They tend to be smaller, not just because they were small, but here's the companies that are going out of business generally. Only or primarily play in the spot market sandbox, right? So they get their freight from the spot market, and that's generally it. As you said, spot market's down a lot, volumes off 80%, rates down almost 30% from peak. So very, very tough. Then, excuse me, add in those companies that went out and bought that really expensive used equipment, as you said. Used equipment prices went up, or for tractors went up 200% over from low to high. If you bought those and you're in the spot market, I don't know how you're making your payments. Then add on things like driver pay continues to go up, right? Not quite as fast a clip, but still faster, more than double the historical average. And then diesel fuel prices are coming down, but are still pretty high, right? You add all this up, and I think those fleets that are in the spot market and bought that really expensive used equipment, when you pile on these other expenses, I don't know how they're making it, right? I really don't. And therefore, I think you're going to see a fair amount of these companies either go under, or if they're independent contractors, they may sell their equipment or get rid of it, turn it in. I can't make the payment anymore. Here you go. Excuse me. And become an employee, right? Under or maybe if they didn't buy that used equipment, they maybe get leased on. So that's another important point, I think. Some people are looking at employment numbers in the trucking industry and saying, oh, capacity is going up because employment's going up. Well, remember, if there was an independent contractor in the spot market and he or she sells their truck or turns it in, becomes an employee, is it a gain in employment? Yes. Is it a gain in capacity? No. They were hauling one, they had one truck before, they have one truck now. So I think people are misreading the tea leaves there a little bit. And in fact, last thing on this, it is true that from the low point, truckload carriers are operating about 6.5% more tractors than they were from the low, but still off 5.5% from where they were prior to the pandemic.
Okay, so the capacity situation, it sounds like at best can be described as in flux.
Yeah, I mean, it is. I think that we will all be surprised that I think all of a sudden, especially if we get the inventories at the retail level under control, if there's any little pickup in demand, I think all of a sudden it will feel a lot tighter out there.
Are those warehouses in places like the Inland Empire and some of those other places, are those warehouses still pretty packed with stuff that came over in 2022 and just hasn't been sold yet? Are they still pretty full?
They're pretty full, but retailers are making progress. Excuse me. Still too high, but I think, when we get through the summer, I think retail inventories and wholesale inventories are going to be in a much better place.
So let's get a forecast from you then, Bob, because while the calendar says we're into June and the middle point of the year, the days have gotten longer. There's more time available for us on the golf course, thankfully. The retailers, the shippers, they're already starting to think about what's coming down the pike in October and September with back to school for August and September. And then October, we get into the Christmas season and we get into the Amazon Prime days and the like, and then things like Black Friday. So they're already starting to look ahead, aren't they?
They are. We're hearing just anecdotes. I want to see the data. Hearing anecdotes that they're going to start ordering more products, bringing it in, which is why I'm glad that the West Coast ports got a labor deal in principle. So I think, again, if we can get back to this seasonality that we haven't seen in a long time, things will start to pick up a little bit for the trucking industry. Not great, right? But a little bit. And next year, what I would love to see for trucking is let's just get back to old, boring, normal, right?
Whatever that is.
2.5% growth in volumes. That would be fantastic. And that's what I'm at this point is what I'm kind of expecting for next year.
Is it possible?
It is possible. You're going to have an economy that's growing about 1.5%. But because we took it on the chin early and we've been in a recession, we could grow a shade more than that. I don't want to give any viewers the idea that I think freight is going to boom. That's not what I'm talking about. I'm just talking about getting back to something normal, 2% growth. That'll feel a lot better for the industry.
Bob, is one of the things that is helping the economy right now the fact that the Biden administration is pumping billions of dollars into infrastructure? I know that you always like infrastructure spending because the dollars have multipliers on that. Explain that for us. We've got about 5 minutes left.
Yeah, first of all, infrastructure spending is some of the best spending that the government can do. It helps commuters. It helps the freight economy. When we're working on roads, bridges, and other infrastructure, it definitely is in the long run adds to the economy, right? And so you get every dollar spent, you get more than $1 back. But for fleets in the near term, this money's just starting to really roll out. And so, yes, housing starts are weak. They're gonna fall about 19% from peak in 2021 to trough this year or early next year before they just tick up a little bit. But you can offset some of that weakness by what's going to come for infrastructure spending. And so it's going to be, we're really excited about it. I think it's going to help the economy in the long run. It's going to help the trucking in the near term and the long run, right? Because listen, when trucks are sitting in traffic, right? And Atri does great study on this, but when trucks are sitting in traffic, think about the extra drivers we have to have because of the lost productivity from those drivers sitting in traffic. And so that adds to the driver shortage. There's a productivity impact from that. So yeah, I'm excited about this infrastructure spending. It's desperately needed in all sorts of areas, right? And I think, that's the other thing. We're focused on roads and bridges, which, are at the top of that list. but there's other types of infrastructure that need to be expanded, which will help the economy and even trucking, right? When you look at other modes, or you look at even, putting in, electric charging stations and all that, that's all infrastructure, right? And so forth. So I think it's going to be a good gift for the industry.
Bob, you seem generally optimistic about, there are always some hiccups and some problems and potential problems for the economy, but you seem overall cautiously optimistic. Is that accurate?
Yeah, I mean, it's all from where your vantage point is, right? I mean, compared to 2021, when the economy grew almost 6%, you'd say I'm very pessimistic, right? But from where we've been as an industry and a freight economy, I think I'm hopeful that we'll hit bottom in the next few months. And if we get those retailers starting to bring in a little bit of freight for a fall freight season, it coupled with, and this is tough to say because these are people, this is their livelihood. I don't say it just callously, right? I mean, but there are companies going out of business, and it's the nature of a market economy. It's a necessary evil. Now, the good thing is, if they're a good driver working for those companies that go under, that can pass a drug test and have a good driving record, of course, they're going to get a job like that, right, with somebody else. But I think that there are companies going out of business. I think if we can get freight to bottom out relative to where we are today, yes, I'm optimistic. Relative to where I was in 2021, well, then you could say I'm pessimistic, right? Because it's not going to be that good.
Bob, it's always good to do these Newsmakers. We do these a couple times a year at least to get your perspective on things. Always enjoy the conversation. It's a graduate school level class in economics about the economic industry, the economics of the trucking industry.
Dan, it's my pleasure. I always enjoy talking with you.
And that wraps up this latest edition of TT Newsmakers. I'm Dan Ronan. We thank Bob Costello for joining us on this edition of Newsmakers. This Newsmakers will be available for on-demand viewing at any time. Just go to ttnews.com/newsmakers. And we're also proud to have had Sage Software as the sponsor of today's edition. Again, we thank you for joining us.
Thank you for joining us today. For more information on future episodes, visit ttnews.com. This has been Transport Topics Newsmakers.